Great, hello guys, welcome to the Solid as a Stock session. Hopefully obvious what we're going to cover today. We're going to go through some stock opportunities and talk the world of stocks. Now before we start, I just need to make sure that we cover the disclaimers. So I'm just going to make sure that they highlight there on the top. There we go. So those are the disclaimers. Please read them as helpful to know, again, not just for legal reasons, but for just understanding in general what your expectations should be from sessions that we do like this. The sessions that we do, whether it's me doing stocks or it's Boyan doing futures or it's Jose doing options or anyone doing any session, it's a demonstration of the product, a demonstration of the technology that we use. It is still ultimately up to you whether or not you choose to act on that and actually place trades using the technology or not, or whether you use a simulated account or a live account, how much money you use, and so on. So those are the disclaimers. Now just to say hello, in case you guys didn't know who I am, or maybe this is the first time that you've watched it, my name is Becky. Hopefully that's obvious, you can see my name there on the screen. My email address, if you tilt your head a little bit, is becky@traddictiv.com. So you can email me if you have questions throughout the session. If you're watching this recorded, you can email me if you have questions. If you're here live, whether that's on YouTube or whether you're within our closed room, again, you can ask questions as we go. I like for you guys to be as interactive as possible so I can make sure that I answer the questions that you have and that I address the topics that you want me to address, so it's as useful for you as it can be. So let me know in the chat as we go, email afterwards, whatever you want to do as to communication with me. Now, that brings me to this link here, which is tradewithufos.com/Becky. Now, the reason that I want to bring that up, let me just find that here. Here we go. The reason that I want to bring that up is because if you go to that link and fill this in and get yourself a free membership, if you don't have already, you can ask questions just down here in a public space. I always say this, I prefer questions in a public space because it means everybody can see the answer. Everybody can know the answer to the question that you have. If you have a question, come down here and maybe rather than email and then wait for a day or so to get a response, you can find the answer to your question here anyway because somebody else has already asked it. So again, much prefer for you guys to ask questions in this public setting. You just need a free membership in order to do that. So go to tradewithufos.com/Becky, fill yourself in this bit at the top, and then you can ask questions publicly. If you feel uncomfortable doing that, of course you can email me, that's also okay. So let me just come back here. Now obviously what we're going through today is stocks. There's a slight change to the used to joining our YouTube sessions. There is a slight change in the way we're doing things, so let me just explain what that is. Obviously we've said hello, so that's done. Now we are simulcasting or simulcasting, not sure how to pronounce that word. What this means is we are streaming in different places. So we are streaming on YouTube, we are streaming on Facebook, we're also streaming within our closed room. We have recently started a coaching program where you guys can join us and be part of our closed room. It means you have access to more sessions than what we do on YouTube. It will also mean that you have access to longer sessions. So what that means is at some point throughout this session, if we say it's an hour roughly in total, at some point after the time that we've placed our first trade, I will be switching off the stream for YouTube and Facebook and continuing the stream within the closed room. So it means that wherever you guys can access us or want to access us, you're still going to be able to get trade ideas, you're still going to be able to get information on how we do things. It's just that if you're part of the coaching program, you have access to a slightly longer session and you have access to more sessions. So that's the difference there between those two. In terms of the coaching program, just so you guys understand a little bit more about it, let me just bring that up here. So let's just go here to tradewithufos.com/Becky. Let's go to /live. And you'll see on this page, we have a calendar here, calendar of sessions. Again, you're going to see the sessions that we're doing, whether those are on, again, YouTube and Facebook. Sometimes we do things within FX Street as well as what's in the closed sessions. Now, you'll see just at the top here that in order to access the closed room, you'll need to log in with a username and password. And then once you're logged in, you'll see the trading room there and that you can access it. So again, you would be watching the same as what everybody else is on YouTube up to a certain point, and then within that closed room you have more time in that closed room with us. Now, in terms of the coaching, just to show you, in order to obviously get that login and to be able to access that if you wanted to, if you just go to the coaching section here, and then there's different plans, whether that's the monthly plan for $21 a month, yearly, which is $233, which gives you a slight discount, or the all-inclusive that includes all of the apps, all of the courses, and one-on-ones as well. But again, whatever one you pick, then you can access those coaching sessions that are closed within that group, but which again gives you access to more sessions and longer sessions. Otherwise, you can join us on YouTube, as you probably already have been, or maybe you want to continue doing that on YouTube or Facebook, no problem. We're still going to cover the same things, again, with just slightly shorter sessions. So hopefully that makes sense. So that's all that intro done, all of that done. So let's now move into looking at stocks. So for those of you that may have joined last time, just seen that pop up there, have joined last time, we looked at this trade here. So what I'm going to do now, I'm going to go through a trade that we looked at last time and just explain whether or not we're still going to have it on, whether or not we want to change things around, whether or not we want to cancel it. I'll then go through the general markets and what we can see there from our technology. And again, you might be looking at this and thinking, what is that down there? What are these lines on the chart? I'll explain what they are, what we're looking at, and why we're looking at them. For new opportunities as well. So we'll look at the general market and then new opportunities. But first of all, let's just have a look at what we did last time. So this was a trade that we put on last time. It's just down here. These black lines signify the top black line there, which is 29.67. That indicates there, let me just highlight that there, what our entry price was, and we have our stop loss there was 29.37, which was wrapped around a UFO. We had a target stop behind for our second target. Now, this has, as we've seen, price has sort of gone off quite fast since then, which means we never got triggered into this trade. Now, is it still something that we want to have out there? Let's take a look. So, for those of you that follow us normally and that you know how we do things and what we do, you will know what I'm talking about when I say that we no longer have everything lining up the way that we want it to have lined up to make this a valid trade. The EMA value is 33.12, which is maybe round about here, which is in the middle of UFOs. Ideally, what we want is that EMA value to be combined with a UFO or to be enveloped by a UFO so that we have more probabilities on our side for that trade to have a higher likelihood of working. At the moment, the EMA value is no longer falling within inside that UFO, so that by the time it got all the way back down here, it's likely that we would see a change of climate. We don't want to be buying in a downwards climate. We don't want to be buying in an environment where we have higher probabilities to the downside. So we would just skip on this one and cancel this trade. So I'm just going to delete these things off the chart here because we are no longer interested in that trade. Now, depending on whether you're connected to a broker or paper trading, whatever, you'd obviously cancel that through your broker as well, or cancel it through TradingView. Now, just out of interest, obviously some of you guys will be using TradingView often, Station. You let me know what you use more, and perhaps I'll spend more time on one or the other, depending on people that are watching, what you guys use and what makes more sense to you. Either way, we're looking at the same charts, same data, and we'll be using the same technology, but it just might be more user-friendly, easier for you to see it if it's on a platform that you normally use. Now, before we start, I always like to come and have a look at our economic calendar. Now, why do we want to do this? Because the economic calendar will tell us if we filter by the right things, and for me, I filter by high impact news and by the United States. Reason for that is because the stocks we're going to be looking at most of the time or all of the time are US-based stocks. They're only US-based stocks because that's where we have higher volume, higher liquidity. It just makes more sense to be getting involved in US stocks when we're trading. That's not to say that this same approach trade stocks in Europe, or if you trade stocks in Asia, or if you trade stocks in the country that you live in, wherever you may be. You can again use the same technology, use the same probabilities, but for us we tend to be looking at US stocks because of, again, higher volume, higher liquidity, and higher regulations as well. So filter by US and filter by high impact news. Why is that important? Because if there is high impact news that's scheduled to come out, let's say a speech that's going to happen, or a meeting between world leaders that's going to happen, or a release on, I don't know, earnings or unemployment or whatever, we need to know that that's coming up so that we can be prepared for potential volatility. We don't use the news to decide whether or not we're going to buy or sell. You could of course layer it in on top of the technology that we use, but for us, we're not looking at the news to help us make that decision. It's just for us to know that there is likely to be high volatility. Sometimes we don't see volatility. Sometimes the price has already factored in the potential news announcement. Sometimes it hasn't. So just being aware of that can help us keep more on top of our risk management. Maybe we place less trades today. Maybe we use a smaller percentage. Maybe we don't trade at all today if there's lots of high impact news coming out. In this case, today being Friday the 19th, we have nothing today. So I'm filtering by this week, which means the only high impact news we had coming out on US markets this week was on Wednesday. So nothing today. If we look at next week, then we'll see, again, nothing till next Wednesday. So for today and for the start of next week, if we're sort of shorter term swing trading, we should be avoiding a lot of this news. If we're still in trades by this point, again, maybe that might be where we want to trail stops or sell out some of a position or buy out some of a position if we want to do that. So again, be aware of these things. You don't need to use it for your decision making, but just be aware of what might be coming up so you can protect yourself. Okay. So I'm going to go into TradeStation now. So again, you guys let me know if you'd prefer if I use a different platform, if you'd rather use TradingView. But if TradeStation works for you guys, then we'll have a look at this first, and I'll go between both of them anyway. So for those watching the recording, it makes sense of both, depending on which one you might use. So let's just have a quick look here. I'm just going to move price over a little bit there so it kind of fills the screen a little bit more. Okay. So this was the market we looked at last time. So what I want to look at now is the ES. And why am I looking at the ES? The ES is the futures contract. Oh, sorry, I need to look at the... there you go. Is the futures contract that represents the S&P 500. So it represents basically the top 500 US stocks. It shows the market as a whole. And again, this is the futures contract, which means it also shows us overnight data as well. So again, why are we looking at that? Because, at least for me, and this might not be the way you guys think about it, at least for me, if I'm going to be getting involved in a stock trade that also correlates with what the entire market is doing as a whole, that gives me extra probability. I like that. That's not to say that I'm not going to take something that doesn't have that correlation. There are other things that we need to make sure that, in my opinion, are more important to make sure that line up. But if we can have something that syncs as well, even better. Now, in this case, we actually have a sort of unconfirmed climate here on the ES. We're looking at a daily chart there, unconfirmed climate. So here is what we see here. The most recent dot on our auto climate here, and this is the daily chart of the S&P, of the ES, is a thin blue dot. That tells us lack of probabilities one way or the other, so we probably wouldn't be doing anything anyway on the ES as a trade. Now, again, that's not to say that we say, right, in which case we're not trading any stocks. There's going to be stocks that have probabilities. We'll look at those when we go through these opportunities. But again, if we were, let's say, for example, we knew that we had a confirmed downwards climate, well, maybe we make it a priority to look for individual stocks that have probability to the downside, because then we know that we at least have an extra correlation there. If the entire market is doing something, let's say the entire market is going up, and the stock we want to look at is a shorting opportunity, well, perhaps the entire market will pull that stock up with it, meaning that our shorting opportunity has less probabilities. Or vice versa. The entire market is coming down and we want to go long on an opportunity there to the upside with a stock that is inside that S&P, then as the stock market comes down, it might pull that stock with it, meaning that our long opportunity would have less opportunities or less probabilities. So again, it's not crucial, but to me, I just think it helps as this extra probability factor. Now, in this case, obviously, we have no confirmation one way or the other, so we'll look at both long and short opportunities, and again, use the technology that we use here to help us with our probabilities. So hopefully that makes sense there. I'm just looking at for the chat there. A way to go. The cat's meow mode. Okay. Hold on. TradeStation is the cat's meow. Okay. All right. I see that. Love the dark mode. Brilliant. Cool. So yeah, we'll spend some more time on TradeStation. Obviously, that's what we're more using here from the chat box. People love TradeStation, so we'll use that. And again, I'll go back and forth to TradingView as well to place trades and draw lines and things like that. But we'll use TradeStation then for the first bit. Now, one of the cool things about TradeStation is using scanners. So I'm going to use these two scanners here. So we've got one on top of the other. Now, why do we use scanners? Because there are thousands of stocks to look at. And of course, you may have a watch list that you specifically look at for specific reasons. Maybe it's the FANG stocks. Maybe it's I don't know, maybe it's Disney because you like Disney films. Maybe it's Google because you use Google a lot. Whatever it is, maybe you have a watch list based on fundamentals, based on subjectivity, whatever it is. And you can do that, no problem. For me, I like to be as objective as possible when I'm trading, which means I actually rather not trade a stock that I know anything about. I know that sounds a little bit strange in the world where we are so used to, when we make stock decisions, understanding the fundamentals and understanding what's going on in that company and the wider industry, and there's nothing wrong with that. It probably helps with probability. But normally fundamentals are subject to subjective interpretation. What looks good to somebody might look bad to somebody else. What looks like a great opportunity might to somebody else feel like it's too late and it's likely to change. So I would rather just use technology, objective technology, that tells me where the probabilities lie, and then I can make a decision based on something that's less subjective, more objective. I don't need to think through different scenarios and think about different things. So if I'm going to be doing that and I just want to be trading based on objectivity, I don't want to be looking through thousands and thousands of stocks to find decent opportunities, which is why TradeStation is great when we can use these kind of scanners. So by the way, if you don't have these scanners and you want them, just email us. So you can email support@tradictiv.com and we'll send you these scanners so that you can install them on your TradeStation. So what these scanners are doing is they're looking through this top one that's highlighted here. This one in particular is looking through all of those stocks and coming back with the stocks that fit a certain set of criteria. So in this case, the set of criteria is going to be what has probabilities to the upside on a daily chart. That's what this top one is doing. If we have probabilities to the upside on a daily chart, we now don't need to look through daily charts of thousands of stocks to find that. We can see it here. It's already filtered through and it showed us 7. So now I only need to look through 7 opportunities to figure out if the other things that I need to line up are lining up, rather than look at lots and lots and lots of them. So we'll look to the upside first, and in general the stock markets are designed to go up. That's not to say they don't fall, and we should be prepared for that if they do, but in general stock markets are designed to go up, so I always kind of prioritize looking for long opportunities if we have the probabilities to match. So funnily enough, the first one that's come back here on this scanner, by the way, once it scans it will be populated here. You just click on it, it's all linked with the charts, and it will then open the separate chart there so we can see what we're looking at. So funnily enough, the one that's at the top there on our scan is the same stock that we had a look at last time. So FCX, Freeport McMoran. Again, I know nothing about that company. I don't need to. I just need to know where the probabilities lie, where the stats show me. So if we're looking at this particular opportunity, and there might not be one, we first need to come over and look at the left-hand side. So we're looking at our bigger time frame here, which is our daily chart. By the way, the time frames I'm using is a daily chart for where my probabilities lie up or down, and then a 55-minute chart as to more precisely where I would get in and if the opportunities line up there. So we use this chart first, this daily chart, because we want to be answering question number 1, which is always, should I buy, sell, or do nothing? That is the first thing we want to be asking ourselves every time we trade, whether you use AutoClimate to help you do that, fundamentals, trend analysis, Fibonacci, whatever you do, have a way to answer this question objectively as much as you can. What AutoClimate is doing for us, it's showing us in the sense of our the colours of the dots and the thickness of the dots that it comes back and shows us where probabilities lie. So if I have probabilities to the upside, then the answer to this question is I should be looking to buy. If I have probabilities to the downside, then the answer to the question is I should be looking to sell. If there aren't probabilities either side, which is what we saw on the ES earlier, then I do nothing. Why would I want to place trades, risk money and waste my time placing trades on something that doesn't have probabilities one side or the other? I'm more likely to lose money, which means it was a waste of my time and waste of my money to place those trades. Sometimes that's difficult. We're very used to exchanging time for money in life, which means we believe that we should be doing something, we should physically be doing something all the time to make money, we should be trading, we should be looking at opportunities. But if they're just not there, if you don't have probabilities, what's the point? Save yourself the time, save yourself the hassle, and then go from there. So let's have a look at this opportunity here. So we have a thick blue dot which tells us, answers question number 1, tells us we should be looking to buy. However, it's obviously there's a little bit more to this. Yes, we have a confirmed upwards climate, probability to the upside, meaning we should be looking to buy. But there's one thing we need to bear in mind, or a couple of things we need to bear in mind. Firstly, these numbers here. So again, if you've never used AutoClimate, I'm just going to explain what that means. If you have used AutoClimate, and again, it's just a recap of what you already know. AutoClimate, by the way, is a free app. So you can go to the website tradewithufos.com/Becky or just tradewithufos.com/join, and you can get yourself the AutoClimate app. Again, it's free. So what do these numbers tell us? This first number tells us how often this market usually moves to the upside. The second number tells us how long this market usually moves to the downside. And this last number tells us how far we've currently been going in that direction that we're in right now. So in this case, we are currently on an upwards climate. We are on candle number 11 to the upside. But normally this market goes up for 8 candles. By the way, I know that says 7.19, I'm rounding it up. Whatever the decimal place is, we round it up. So if this market usually goes up for 8 candles on a daily chart, so 8 days, and we're currently on candle number 11, what that tells us is we have surpassed what is usually likely to happen in the markets, in this market, which means we have higher probability of it changing direction than we do of it continuing to the upside. That's not to say that we're not going to look at opportunities or that it's not worth sort of furthering that conversation, but it's just something to be aware of. We now lack a few probabilities here. So again, it depends on how strict you are. I say this often. If you are a person that values more accuracy and probability and being right more often, you will be stricter on the criteria that it needs to reach, which means you will have less trading opportunities. Because for a trading opportunity to tick every single box is going to be harder than for it to tick most of the boxes, for example. So you may be somebody that says, if it usually goes up for 8 candles and we're anything over 8, I'm not touching it, I'll look at a different opportunity. And that's a very valid way of doing things. You might be somebody that says we still have a confirmed upwards climate. So although it's gone past what's usual, that's not to say I won't be able to get in for another couple of days and just ride this continuously as long as everything else lines up. As long as I have this, my thick blue dot, I'll take a trade. You might be somebody that's in between, that says if it's up to 50% more than what's usual, then I'll take the trade. If it's more than that, then I won't. If it's 20% more, 100% more. Again, it's fine, wherever you fall on that spectrum, which is to do with you as a trader, how risk averse or risk tolerant you are, and how much you value probabilities versus amount of opportunities. Again, nothing wrong with that. Know where you sit on that spectrum and stay there. Be consistent. If you sometimes take it if it's gone over that number and sometimes don't take it, then you're behaving inconsistently. If you trade in an inconsistent way, your results will be inconsistent. So if you have a rule, fine, have whatever rule you want, but use it all the time, be consistent. In this case, for me normally, I will go up to 100% more. So if, let's say, normally goes up for 8 candles, as long as it's currently gone up for anything up to 16 candles, which is twice that, so 100% more, then I'll still look at the rest of the opportunity. You might have a different rule and that's okay. So for me, it's still worth looking at the next stages here. However, as we'll see, we'll probably won't be able to find an opportunity on this anyway, but I'll explain why. So once we've answered question number 1, which is should I look to buy, should I look to sell, or should I do nothing? The next question will be, and let me type that on here. The next question will be, if I buy, where? If I sell, where? Just because it's a probable market to the upside doesn't mean we just press buy at whatever the price is now. If we do that, we are buying based on the random time of day that we happen to be looking at the markets, which is a very subjective thing. It also means it's much harder to reduce our risk and set our risk, increase our probabilities, and increase our profit potential. So yes, we might be looking to buy, but we need to understand where specifically are we going to do that allows us to manage our risk in the best way, capitalize as best we can, and increase our probabilities. That's where these beauties come in, our UFOs. Oh, my arrow went weird. Our UFOs. These are where these are important. Now, our UFOs stands for, again, for those of you that might be new to this, unfilled order. Unfilled order basically means if there are buy orders in the market, so if you press buy, that goes in as a buy order to the market. If you press sell, that goes in as a sell order to the market. There are buy and sell orders waiting at particular prices. The bigger the stack of buy orders, the more likely it is to push price up. Because the bigger the stack of buy orders, the less likely it is that there's enough sellers to counteract it. Like anything in life, if you have more buyers than sellers, price goes up. If you have more sellers than buyers, price goes down. So it's important for us to understand, and that's why we use the AutoUFO app that analyzes the data for us and shows us where we have probabilities of these big stacks of orders. Because it's important to understand, if I'm going to buy, surely I want to buy at areas where there's lots of buying going on. Because the more buying there is, the more probability there is that it pushes price up. If I buy here, just at whatever the price is now, well, perhaps there's not other buyers going on, or maybe actually there's sellers coming in, and it pushes price down, and I've got to wait for it to go down a few dollars by the time it actually comes to a point where it's likely to go back up again. So hopefully that makes sense. You guys let me know in the chat if it does or doesn't make sense, but hopefully that explains a little bit as to what goes on behind the UFOs, why we use them. Now, there is an extra layer, because you might be thinking, well, hold up, there's what, 1, 2, 3, 4, 5, 6, 7, 8, 9 UFOs, there's a couple overlapping each other here. 9 UFOs on the chart, which one do I pick? Do I pick all of them? Do I place 9 trades on the same market? Do I just pick the top one because it's the top one? Which one do I pick? And actually, are any of them higher probability enough? This is where we layer in something I referred to a little bit earlier, which is our EMA value. So the EMA value, we come back over here to our daily chart, to our bigger of the 2 charts. I'm using daily and 55-minute, which makes me like a short-term, mid-term swing trader. If you are investing, you might be using like monthly charts and then 377 minutes. You might be using weekly charts perhaps, or maybe if you're a day trader, you might be using 60-minute charts and 8-minute charts. The charts you use, the time frames you use will depend on you as a trader, but again, the same applies. You're using the bigger of the 2, so in this case it's a daily, using the bigger of the 2 to help you answer question number 1, and you're also going to use it to look at EMA value. And you're using the smaller of the 2 to help you with UFOs, to be specific on your entries and your stops and your targets. So when it comes to the EMA value, why is that important? Now the EMA, it stands for exponential moving average, or in this case it's MAE, moving average exponential, same thing. What the EMA value is, it is a moving average, a moving line. We see here there's a line that's moving through price there. That's important because everybody in the world pretty much has access to this indicator, which means there are many people that are using EMAs to help them make buying, selling decisions. By itself doesn't always work out. By itself, you might have, if we go to TradingView, but easier for me to show you. If we go here, it'll be easier for me to show you here because we've got price. So let's take this chart over here, which is the same chart, daily chart of this stock. The EMA value, in theory, if price is above the EMA value and comes down to touch it, it then reacts and goes up. Because there are people that are using this to say, if price is above the EMA and then touches it, I'm going to buy. If price is below the EMA, comes back to touch it, I'm going to sell. That would be the sort of typical way that people use this indicator, use this technology. Not just retail traders, not just people that are trading for themselves, but also fund managers as well will also use a similar technique. So why is that important? If we come back here to TradeStation, why is that important? Well, because if we have buy orders that are coming in because people will use the moving average to decide to buy, if price is above the average, and we have buy orders coming in from our UFOs, then we're combining 2 different things that are not related to each other that are adding buy orders into a market in an environment where we also have probability to the upside. So it's checking these boxes to give us as much probability as possible that the price is likely to go up from the place where we're going to get in. Because if we have an EMA value, and I'm just going to draw it randomly, let's say the EMA value was here. It's not, but let's say it was here. Then we've got a couple of UFOs, so stacks of orders on top of each other. We've got an EMA value in between, which means people are likely to buy at the EMA value anyway, in an environment where we have probability to the upside. So again, if we're going to be risking our time and money, surely we want to risk those things in an environment where we have the highest probability or the highest potential of it working out for us. That's why we add the EMA value in there. Just going to look there at the chat box. So the weighting of the order stacks at their position should be an influence. Weighting of the order stacks at their position should be an influence. So when you say the weighting of the order stacks at their positions, do you mean how many orders? Is that what you mean? The weighting of the order stacks? If that's what you mean, then yes, you're right. So if you've got a lot more orders in one than the other, then that's going to obviously be an influence as to which one works better, which is why we add the EMA value in to add more orders to that position there, so that we can see objectively from our UFOs where we have probabilities that there's buy orders plus other probabilities that there's buy orders. So let's buy around there. So hopefully that's what we meant. Cool, brilliant. Okay, so in this case, our EMA value is 33.11. And what I'm going to do, I'm just going to take a horizontal line here. I'm going to draw it on the chart at a random place. I'm going to double click on it. And I'm going to type over on this price data here, the value I want. So it's going to automatically snap to where I want it to be. So in this case, 33.11. If I click OK, you'll notice that our EMA is now kind of here in the middle of nowhere, like not really close to a UFO. So in this case, yes, as price moves, because bearing in mind a moving average is an average of the last few candles. In this case, it's a 9 EMA. So the last 9 candles, it's given an average. It's exponential, so it gives a little bit more weight to the end, to the most recent data. But either way, it's a line that moves with price because it's taking the average of price and showing that and plotting that on the chart. So as price moves down, as this moves down, the EMA is also likely to move down, and it may fall within these UFOs. But we don't know that. If it moves down very quickly, like shoots down, that might not happen. If it moves down very slowly, then we might start to see a change of climate anyway by the time it enters into a trade or by the time the EMA might line up. So I would say in something like this, I would put an alert on, maybe around about 33.50 maybe, an alert on your TradeStation, on your broker, whatever broker you use, to tell you if price comes round about here, so that you can then have a look at it at that point and say, okay, yes, the EMA has moved down, it is enveloped by the UFO, worth taking the opportunity, or no, it's not, climate's changed, move on. So I would set an alert here rather than take your time and take your capital and your margin here to be placing trades if you don't need to at the moment. It's not lining up in the way that we want it to. So that was the first one to look at, and again, some things lined up, but it didn't line up exactly. And when it comes to the EMA and the UFOs, that is a rule that we are very strict on. That's not a pick it if you want. Of course, we are all individual traders. It's your money. It's your choice as to what rules you have. You might just be saying, do you know what? I'm not even going to look at the stats. If it's a thick blue dot, I'm going to buy it, and I'm going to buy it at the top UFO, whichever one that is. Okay, fine. But be consistent, track it, test that, back test it, make sure that works for you. You might be somebody that says, not only do I need it to be a confirmed climate either way, but I also need it to be within the stats. I also need to make sure that the EMA value lines up with my UFO, and it also has to hit Fibonacci, and it also has to be good fundamentals, and it also needs to be correlated to other markets. So you're adding more and more rules there, which again means you're going to have less opportunities, less chances. But if you do end up getting into a trade, you're going to have many different factors there that add probability to the trade. So again, neither approach is right or wrong, just pick one. As far as we are concerned, the EMA falling inside of the UFO is a non-negotiable. That is a rule that we stick to because we want to get into trades where we have the highest probability, and those two things coming together give us the highest probability. So let's have a look at the next one. So again, we'll just click on the next one. The scan has done its job for us. It's coming back with opportunities. All we need to do is click on it and it will load the data. So let's have a quick look here. You might have noticed, by the way, so this blue number here, you might be wondering what that is. This tells us the percentage of the time that price moves between UFOs. Essentially, it's a probability rating. Which will change depending on the market, depending on the time frame, depending on the calibration of the app that you use, how you configure the settings of the UFO app. You can make it more or less sensitive to UFOs, which again will change the probability. But this could be again an added variable for you. So you might be saying, And again, this number just tells you the percentage of the time the price moves between UFOs. That's not taking into account that it would be following a climate or not following a climate, or whether or not it involves the EMA or not. It's just simply UFOs as they are. So it's not probability of the strategy as a whole, it's probability of just the UFOs. But if the UFOs themselves have a reasonably high probability, and then you layer in those other things as well, again, even better. So you might be somebody that says, as a rule, I want this number to be more than 30%, or more than 40%, or more than 50%. Again, the higher you put that level, the less opportunities you're going to have, but you're going to have high probability that they work out. The lower you put that level, the more opportunities you're going to have, but you have a higher probability of them not working out. Again, doesn't matter which one you pick as long as you're consistent. So in this case, actually over 50% is a reasonable number. Again, 50% of the time moving between UFOs without any other layers involved is a reasonable thing, especially when you might have UFOs that are 3, 4, 5, 10 times away from each other. If you get 3 to 1s 50% of the time, you're doing really, really well. So again, like I said, there's other factors, other variables going on here, but hopefully that makes sense as to how you might use that number as well to help you with your decision. Okay. So let's just come over here. I'm going to quickly rule this one out, and that is based on the stats. So yes, confirmed upwards climate, probability to the upside, happy days. However, we have, normally this market would go up for 6 candles, and we're on candle number 24. So if my maths are right, that means that we have gone 4 times? 6 times? 4 times. 4 times more than what is usual. Again, my maths is not great, but we have gone many times. It's not hard to see that. We have gone many times over what is a usual move to the upside, which tells us we are much more likely to see price change direction and come down than we are to see a continuous move to the upside. It's way past my rule. My rule would say anything up to 12 on our current movement to the upside, I would still look at it. That's twice that. So I don't want to be looking at that. I don't want to be getting involved in an opportunity where perhaps things are unlikely to sync up for me in the way that I want them to. So I'll just look at the next opportunity. Just close that. So again, we'll just click on the next one. And again, the scanner is showing us where we have confirmed climates with price reasonably close to a decent opportunity, and again other factors as well based on options pricing and things. So again, it's showing us where we have decent probabilities, but that's not to say that we just go place trades on them. There's still other things that need to line up. So in this case, we've actually just changed here our auto climates. We've actually gone now to a thin red dot. That tells us lack of probabilities either way, in which case we don't want to look at that. I ran the scan a couple of hours ago, so it's obviously changed since that point. Normally on a daily chart, it's unlikely to change within the day, but sometimes that happens. So in this opportunity, this one that we're looking at here, we have a thick blue dot, confirmed upwards climate, probability to the upside. It is Zillow Group, that's the stock that we're looking at. Usually the market goes up for 8 candles. We're on candle number 13. So my rule would say we've got room for the next at least 3 days or so to be in this trade. So I will be taking it further and looking at the next steps of the methodology. Again, you may have a rule that tells you not to do that. If that's your rule, you stick to it. Just because I have my rule doesn't mean that that's something you need to do. The stats are there. Objective stats are there. How you interpret that is based on your profile as a trader, which is something that you really need to figure out, I would say, before you start trading, before you learn methodologies. Who are you as a trader? How do you feel about risk? How do you feel about probability versus amount of opportunity versus the timeframes that you use, and how many opportunities you'd have in a certain amount of time? Are you okay to be right less often if when you're right you make more money? Would you prefer to be right more often but make less money when you're right? There's no right or wrong in any of that. That's about you as a person and the things that make you up as a human being. So know those things, and then when you learn a methodology, it's much easier to then mold it into an objective methodology, but that is based on a subjective thing, which is you, that's much more likely to work consistently. In fact, by the way, we have a sharpening session tomorrow at 12 p.m. Eastern. I'll be taking that, so I will go into that in more depth as well tomorrow, trading plans and figuring out where you sit on these things. That will be the content of the session tomorrow. So if you want to join that to help you out with those kind of things, then you can. Okay, so we said we'd look at a new opportunity with this one, so let's take a quick look. The EMA value at the moment is 180.58. Now 180.58, if we just draw that on the chart, how a quick look. 180.58 is just below this UFO if we spread that out, which means unfortunately, again, we have rules there for a reason. We're not going to bend the rules just because it slightly breaks them. Otherwise, where do we draw the line on that, right? So we have to be clear on this. It is outside of the UFO. We want them to be inside of the UFO. So even though it's just out, it is still out. And as price were to move down anyway, the EMA is likely to move down another, few cents at least, meaning it would be round about there. Which means, again, doesn't line up in the way we want it to line up. No problem. Let's look at the next one. And again, part of our job is to, as traders, is to eliminate opportunities that might waste our time and money. So that's okay. It's okay to go through 10, 20 opportunities and actually only place 2 or 3 trades, because the 2 or 3 trades that you place are going to have probabilities on their side, rather than look through 10, 20, 30 opportunities, place them all and lose the majority, and then hurt your account. Why would we want to do that? So here we have thick blue dot, confirmed upwards climate, probability to the upside. We have usually the market goes up for 8 candles, and we are on candle number 13, meaning that we are still within, as far as my rules go, still within the probabilities to look at the next stage. Our EMA is 186.73. So it looks like it's going to fall within that. So let's just draw this on the chart. 186.73. There we go, nicely snug within that UFO. And yes, as price it moves down, the EMA will move a little bit, but it's unlikely to move outside of that UFO. So here we go. This is our first opportunity that we're going to be looking at. Zillow Group, so ZG or ZG. So let's now go to TradingView, and we'll have a look at it on here, so that we can then place the trade through that. So ZG on the stock. We had, it was this UFO here. On TradingView, we're seeing a couple of UFOs on top of each other, so we'll just incorporate those 2. So 186.6 still works. Okay, so these UFOs, these 2 grouped together here, that's what we're going to be looking at. And we're going to be using that as our entries and stops. So let's just take a quick look. I'm going to squidge this a little bit. Maybe let's go back to TradeStation to see where that may be. So we want to know, first of all, where our final target would be. So I'll get to entries in a second. On this particular one, the target that would be 188.76. So let's just figure out where that would be, whether or not this invalidates the trade. So 188.76 would be, just draw that randomly on the chart and then I can put that in, 188.76. Okay, so literally just above our UFOs there. So let me just explain why this isn't perfect, and actually for me will invalidate this trade. Now on the on TradeStation, let me just make this chart bigger. We can see here that we have a UFO, a red UFO, literally. Oh, just move that accidentally. Literally just above us. Let me grab price and move that. Literally just above us, and this UFO starts at, if I just highlight this here, 188.36, which means sell orders will start to come in around about that price, which means I don't want to be buying right here, especially when we've already seen that we've surpassed what's usually happens in the market. I don't want to be buying just underneath that, because it's likely that, yeah, it might go up a little bit, but then hit a stack of sell orders and then come back down. Why would I want to be buying a small, on a smaller time frame at a stack of buy orders if there's a bigger stack of sell orders just above me? I don't have room for this to go to the upside and take me to a profit level. So again, for me, not something that I want to be doing. Again, you may have slightly different rules. If you do, that's okay. Be consistent. Make sure that your rule on where you take your final target is consistent. Maybe you do trailing stops. Maybe you use the UFOs on the smaller time frame. Maybe you use Fibonacci retracements, whatever you do, but be consistent. For me, this rule is invalidating the trade because it's literally, it's not even 1-to-1 away. If we have a look at TradingView again, let's just say very quickly, and I'm going to use my Fibonacci's here to just draw that, just to show you where that would be. If that's my entry and stop, roughly, we haven't worked it out exactly, then if it wants to go 1-to-1 away, let's just kind of draw it roughly again. We do that and then move it. if it goes 1 to 1 away, and 1 to 1 is not a great profit target, then it'd have to go past where the stack of sell orders are. And it's less likely to go past where the stack of sell orders are because there's a big stack of sell orders in the way. And sell orders push price down. So again, why would I want to be fighting against the bigger stack of sell orders? So again, I'm going to move on to a different opportunity here. Not worth it for me. Again, up to you guys if you have different rules. But hopefully that makes sense as to why I ruled this one out. So we'll just come back and do what we did before. We'll click on the next opportunity and have a look. By the way, I'm noticing the time. I would normally want to find an opportunity before I go back to the closed room. It might be today that we're just all here together for the entirety of the session, so that we at least get one opportunity in for you guys watching on YouTube. I want to make sure you guys get that. So let's have a look at this one. Let's very quickly see if that lines up. Looks like it might, so let's have a quick look. So we have confirmed upwards climate, probability to the upside. We have usually this market goes up for 6 candles. We are on candle number 11, meaning for my rules at least, we have another day or so where we can potentially get into this trade. Now, to be fair, for price to come down, hit a UFO and then go back up again within a day is not so likely, but hey, might happen. So again, let's make sure that we cancel the trade if things change and we don't get into it before we break our rules. At the moment, it's still within the rules, so we'll put the trade on. Again, just make sure that we look at it on Monday to see where things are at. So we have an EMA value at 49.90. So I'm going to take the horizontal line there, and we're going to look at this, 49.90, and that falls just above this UFO. Now, as we've talked about before, as price moves down, if price moves down, the EMA value will move with it. Now, before we looked at an opportunity where the EMA value was just underneath the UFO, and we ruled it out because especially as price moves down, then this would move down. Now, in this case, because the EMA is above the UFO, if price moves down, then the EMA value is likely to also move down, and it will move down into the UFOs. So there's an element of anticipation here that we need to have a look at. And of course, it's going to be maybe experience that's going to help you guys figure out how far price is now, what usually happens in these markets, how quickly they move and things like that. Again, you could set an alert like we did right at the start of the session. Set an alert to see what happens once it comes here. But the good thing is, because we have UFOs on top of each other, it's likely that however far this falls down, moving with price, it's going to fall within at least one UFO. So I'm going to take this top one. I would say it would be likely that it would coincide with that. We actually group these first two together anyway. So we'll take these first two there as an opportunity. So again, let's go back and look at TradingView. I can't remember what market we were looking at there. Zion, so it's, okay, so it's actually called Zion. Cool. And again, I know this might seem strange because I know a lot of people obviously trade stocks that they know, that they've researched, that they spend a lot of time researching. Nothing wrong with that whatsoever. Again, for me, I want to be as objective as possible, which means I'd actually would rather not know what's going on with that stock. I just want to know where the probabilities lie based on what usually happens in the markets and based on where the orders are. So, like we said, we are now over on TradingView to have a look at this market, and we are going to take this top UFO here, so 49.90. So we're grouping those two together. In fact, I think on TradeStation, that top one didn't exist yet, so it was actually on TradingView it'd be 2 and 3. So let's take those. So it was from the top here to this UFO here. So we're grouping these two UFOs together. Now we will take this top opportunity. Let's just have a look quickly where the opposing sell UFO would be. That's a reasonable distance away by the looks of it. Let's just squidge price. So again, what happened before is unlikely to happen this time. Here we have 51.79. That would be where our target would be. So that's a decent enough distance away. And when I say decent enough, I know that sounds like a subjective thing to say. What I mean is more than 1 to 1 away. So 51.79. So that will be where we place our final target. That will be where we place our target number 2. Target number 1 will be 1 to 1 away. So we are likely, if it goes in our direction, to at least make 1 to 1. So our entry, where are we going to do that? So we're going to take this number here, 49.81. and I would just use it and use 49.81 exactly. If this was Forex, I would be adding a couple of pips, but as it's a centralized exchange, I won't. I will just leave it at 49.81. Now, our stop, 49.13, I'm going to take 10 cents off of that. Just to give it a little bit of room. Again, that's my rule, it's always 10 cents. You might decide to do it as a percentage of the value, percentage of ATR, to do with volatility. You might not do it at all. Again, doesn't matter which one you pick one, be consistent. So all the time, that's what you're doing. And then you'll start to be able to figure out, is that's the rule that I need to change if things aren't working for me. My rule always is 10 cents, just because it's easy maths, which means my stop will fall at 49.03. Which is just before this next UFO, so it's going to be in the white space there, which is what we want. So I'm going to use my Fibonacci lines. By the way, I've customized them to just show me 0 and 1. Normally Fibonacci lines will show you things in between. I don't use them for that, I use it as a drawing tool. I'm going to come to coordinates and just type over there what I want it to be. So 49.81 is my entry, and my stop loss will be 49.03. I do that on the chart for a couple of reasons. One, highlights it for later, so as the orders get filled, UFOs disappear because they're no longer unfilled orders, they're filled orders, so UFOs aren't there. So it means it's easy for me to come back and see where I got in and where I got out, if I was right, if I was wrong. But it also is helpful reference for me on my, when I'm placing the order, to have the reference of what those are. So I'm just going to come over and I'm going to place this order in TradingView. Again, I've linked TradingView to TradeStation. So let's say if I was trading in a live account here, this happens to be a simulated account, but if I was trading in a live account and I clicked buy on here and I went through and I clicked the button to buy, it would route through TradingView to TradeStation and place the order with the broker that I have the money with. So that's a pretty cool technique here. Even if you use TradeStation as a broker and you use TradingView as a platform, again, you can combine the two together. So if you press buy on one or press sell on TradingView, it goes through to TradeStation anyway. So again, we're going to make sure it's a limit order, and we're going to type in here what the price will be. So 49.81, that's our entry. Our stop, 49.03. Now, another thing I like about TradingView rather than TradeStation for this purpose is it does maths for me. TradeStation requires me to be a little bit cleverer than I am, so I'll use TradingView to help me. So here, this has told me that if I was to trade one share, if I was to buy one share, I would be risking 78 cents. It's also told me a little bit later on down here. Let me try and get that. So trade value, $49. So I'd need at least $49.81 in the account to be able to trade one share of this. So again, we can use this to help us with the maths to figure out how many shares we want to be trading. Now, what I like about this is you can type over it and say, I want to risk this amount of dollars. And then that will tell you how many shares that is. So in the examples that I give here, I normally put $50 on one trade and $50 on the other trade. So it's two separate trades because it's two separate targets. The entry and the stop is the same. We have one target 1-to-1 away and one target we've already figured out based on the UFOs. So if I want to risk $50 on one, $50 on the other, so overall $100 risk, which is just an example. Of course, you guys are going to have different numbers as to what you're comfortable to risk, percentages of your account and so on. I just put in $50 and that tells me 64 units, 64 shares is how many I would need to trade in order to risk less than $50. Now, in terms of taking profits, I'm going to put in here what I love about TradingView as well, is if it's 78 cents between my entry and stop and I want my first target to be 1-to-1 away, then I just put in 78 here and then that figures out what the price is for me. So my safety target, my first target is at $50.59. That's the price where I'm going to get out for my first target. So now all I need to do is just double check it. My entry is what I want it to be. My stop loss is what I want it to be. I'm risking $50. Again, you check, do you have the capital in the account to be able to place that trade? And then you would take profit there as well, based on the same distance away, and then just click buy and send order, and that will go through. There you go, and now it's come up on our screen there, so we can see the orders in. I'm also just going to put a horizontal ray in and just put that around there, 50.59. So again, I've got a reference to it outside of the order itself. It's on the chart. Just looking at any questions. So, is there a situation where UFOs move with price action and EMA as it works up and down? So UFOs don't move. Good question. So the UFOs are kind of static because it is a set range of price where those orders are. The EMA will move, so the EMA can move in and out of a UFO. And for us, we want to be placing the trade when it's inside the UFO. But rather than UFOs move, as price moves up, for example, new UFOs will appear. So if that original UFO that's maybe, let's say, I'm using my hands here, let's use the screen. Let's say that we've got this UFO waiting and price never comes back, it just keeps going up. Then what could happen is new UFOs form. This UFO is still here, there's still buy orders there, but they weren't triggered. And now a new UFO forms, and then maybe the EMA has also moved, and then we take that one. So the EMA is a moving, sort of living, breathing creature. Obviously it's not, but it moves with price. The UFOs will be static on the chart, but new UFOs will appear as price moves. So hopefully that answers your question. Let me know if not. Okay, so we've put in trade number 1, let's put in trade number 2. Exact same thing that we did before, 49.81 is our entry. Stop loss, 49.03, it's remembered it since last time. And my profit target is going to be 51.79. So there we go. We're risking again, let's put in $50. It's automatically worked out from here that in order to get it to the closest to $50, it's going to actually need to be 49.03 cents. No problem. 64 units, so we've got 64 shares on one trade, 64 shares on the other trade. The first trade, if we reach our safety target, we'll get out and we'll lock in 1-to-1. If the second target hits, then we'll lock in that profit as well, and overall we'll balance out in the middle. That will be the overall ratio of the trade. If we're wrong on both of them and it just goes straight through, then we lose $100, which is what we'd already agreed. That's what we wanted to risk. Again, it could be $10, could be $1,000, whatever you want it to be. $100 as an example. It could be that price hits our target 1, we take off 1-to-1, and then goes off and stops us out, in which case we balance out at a break even. So the 3 things that could happen, we have higher probability of either a break even or a profit than we do of just an out and out loss. So again, you check that everything is where you want it to be and then click buy, then click send order. Again, it will route through TradeStation or whatever broker you've connected it to if it's available on TradingView, and there we have our trade. So what is the chance of getting filled really if ATR is smaller than the delta from price to entry? So again, good question. So essentially what we're saying is, if price here, if normally this market, and I'm making up the numbers here just as an example, if normally price moves based on volatility, I don't know, 50 cents a day, let's just make that up. Well then, within a day, it might move down to 51, it's at 51.54 now. Might move down to 51, but then we're not getting filled. Our price is down here at 49.81. So yes, you can use volatility and things like that to give you higher probability of whether or not you're likely to get into a trade. AutoClimate actually kind of does that for you as well. I think the question probably came from already knowing that fact, but I'll just explain it anyway. That here, we have lines on top of our dots. What those lines tell us is how many ATRs away we are. Essentially saying you are close or far from an entry. The smaller the line, the closer you are to a potential entry. The longer the line, the further away you are from a potential entry. So again, you could use that as a filter system almost to say, yeah, okay, I've got a confirmed upwards climate, I've got stats on my side, I've got UFOs, I've got an EMA lining up right now, but we're ages away from a potential entry. Essentially, by the way, this is tracking how far price is away from the EMA. That's what that's doing. And considering our entry is going to need to be around an EMA, that's a fair thing for it to be telling us. Price is really far away from an EMA, which means you are much less likely to be able to see an entry triggered within that amount of time or within a day or 2 or 3. So again, it's up to us to then figure out, okay, maybe in this case, we are very nearly over what we want to be on our stats. So in that case, you might be saying, look, maybe it's not worth me placing a trade, maybe I'll place an alert, maybe I'll place it and I'll just check on Monday, Tuesday, see what's going on, I might need to cancel the trade then. You might be saying, there's no point me placing a trade that is far away from my ideal entry price if I'm then going to surpass my climate by the time I would get into that trade. Let's say we are on candle number 1. So let's say instead of 11, that said 1. we're on candle number 1 out of usual sort of 6 or 7 to the upside. My arrow went weird there. Then we might go, okay, it might be reasonably far away now from an entry, but I've still got 5, 6, 7 days or 4, 5, 6 days to be able to get into the trade, which means it could be that it goes down by, if it was 50 cents, 50 cents, 50 cents, 50 cents, that's 3 days, I'm in my trade, and then I've got room for it to move up and still be within my climate statistics. So hopefully that makes sense as to how I've explained that, as to the fact that you can use these lines, you can use this sort of ATR here, and you can see the number there. So this is, at the moment, it is more than a day's worth of ATR away, 1.14. So normally, within our average true range, how far a market moves, within 1 day, we are 1.14, or I guess 114% over that. So less likely to be triggered within the time frame that we want to. Doesn't mean it won't happen, just means it's less likely. So if you place the trade, you then want to check it on Monday and make sure that everything lines up. If it doesn't, and it's not come close to an entry, we've now surpassed the rule as to when we would be getting into the trade, so we cancel it. If it does make sense, and it does still line up, and maybe price has moved farther than it would normally within a typical day, and you have been entered, then great. So hopefully that makes sense. Cool. All right. So I've actually gone over what I wanted. Didn't switch to the inside room because I want to make sure that wherever you guys are watching, we at least have one opportunity that's out there. Sometimes we'll get through some quicker. If I explain things more, it takes me longer. That's I guess my fault. So for today, we've all got the same opportunity here, which is on Zion's. We're using the UFOs that we've got there. We've got our entries and targets all put in. We'll come back next time, a couple of weeks' time, to see what happened, what worked, what didn't. Did we get triggered? Did we not? We'll probably have to cancel this trade based on that ATR rule. But hey, maybe we'll get triggered and we'll see. We'll look for new opportunities next time as well. Any questions? Like I said, I much prefer it. If you go to tradewithufos.com/Becky, if you have a free membership already, great, come to this link and ask me the question in a public setting. If you don't have a free membership already, it's just loading there. My internet's a little bit slow. There we go. If you don't have a free membership already, you can set one up pretty easily here. Just name, email address, and click through for the steps. And then here you can sign in and you can ask a question in a public setting. So if anything I've said doesn't make sense, or the questions that I've had today have been great, asking questions about, do UFOs move? What if an EMA and UFO don't line up? What about ATR? These are really, really great questions. If you're watching this recorded and you have questions, please, please, please do it in this public setting so that I can answer the question for other people to be able to see the answer. If you really hate doing that, you can email me, becky@traddictiv.com. So I will be back tomorrow for a sharpening session. I'm going to talk more about trading plans tomorrow. Of course, on sharpening sessions, by the way, if you guys turn up and you have a bunch of questions, I'll do that. I'll prioritize what you need in those sessions in terms of answering what you need answered. Otherwise, if people don't have questions, then my planned topic is to go through understanding yourself as a subjective human and what you value before then molding methodologies around that. So if you want to join me then, join me then. Otherwise, you've got recordings, other things that you can be looking at. You've got the coaching, you've got courses, you've got apps. If you need help with anything, you've got support@traddictiv.com or the specific instructor that you want to speak to. In my case, at becky@traddictiv.com or this link. And I'll be back tomorrow for that. I'll be back next week for more sessions on market commentary and stocks. So hopefully I'll see you guys then. Otherwise, hope you guys have a great weekend. Hope you have a nice round off to your trading week this Friday. And that next week kicks off well for you. And I'll see you soon. Take care. Bye-bye.